So, you want to invest? You have some money in your savings account and now you are looking for an opportunity to multiply them or at least to beat the inflation? You are in the right place. First of all, please subscribe and turn on the notification bell so you will know when we publish more finance videos. Now let's get into business. The most common investments include stocks, bonds, mutual funds, exchange-traded funds, ETFs, and real estate. Each of these has its own set of risks and potential returns, and it is important to understand the characteristics of each before investing. Additionally, it is often recommended to diversify one's portfolio by investing in a mix of these different assets. I, for one, like stocks or index funds. They can be risky, hard to analyze, and they tend to grow high in several years, but to me they are worth it. But what are each of the assets we lined up earlier? I will let my colleague Phil to explain the rest.
Thanks, Joe. Well, what are stocks? A stock represents a share in the ownership of a company and constitutes a claim on part of the company's assets and earnings. There are two main types of stock, common and preferred. Common shares give shareholders voting rights but, in some rare cases, no guarantee of dividend payments. Preferred shareholders are guaranteed a dividend payment but have no voting rights. Now you know, Joe, that my word is my bond. But what is a bond as an asset? A bond is a debt security that pays a fixed amount of interest until maturity. At maturity, the face value of the bond is returned to the investor. Bonds are issued by companies, municipalities, and governments to raise money.
I know, Phil, that you like mutual funds. You even worked for one in the past. What are these as assets?
A mutual fund is a type of investment vehicle consisting of a pool of funds collected from many investors for the purpose of investing in securities such as stocks, bonds, money market instruments, and similar assets. Mutual funds are operated by money managers who invest the fund's capital and attempt to produce capital gains and income for the fund's investors. I will let you, Joe, describe what an index is.
Thanks, Phil. An index is a statistical measure of the changes in a portfolio of stocks representing a portion of the overall market. Examples of indexes are the S&P 500, Dow Jones Industrial Average, and the Nasdaq Composite. Indexes are often used as a benchmark for the performance of an individual stock or a portfolio of stocks. In summary, stocks represent ownership in a company, bonds represent a loan to a company or government, mutual funds are a collection of stocks, bonds, and other assets managed by a professional, and indexes are a measure of the performance of a group of stocks or bonds. Thank you very much for watching, brothers. See you next time.